One. Good morning, SMF MMT, 6 o'clock a.m. Pacific Standard Time, 3/28/2011. This right here is a New York Stock Exchange pre-market gap open up list. WAB 2.95, WLT 2.76, Mosaic is in here, and both Potash is in here. Now, both are good to trade in our market maker platform because we do cover these two right here. And it's a listed stock, and it was part of the training that we did over the wonderful weekend. And we had talked about what the behavior was on Saturday between a market maker that's in the NASDAQ arena versus a floor specialist, a single individual on the New York Stock Exchange, and how they control the volume and the price between the buyers and sellers. And that's what SMF does. That's what an SMF market maker does, except our platform is a little bit smarter because we have them all priced in. So we have a very nice pre-market NYSE gap. The way that it will work is that we would be looking for the key indexes of the Dow, both the fear indicator, the VIX, the VXN, and whatnot, because we come down to levels, and we're going to watch in the current cycle is that it's the last 3 days of or few days left of March. Does that big money come in and want to get ahead? We're going to finish the first quarterly earnings cycle because we are. That's January, February, and March of 2011. 3 of the calendar months, but in actual trading days, we calculate them as 20, 40, and 60, 20 days being a 20-day trading month. And price action between buyers and sellers and the rest of the Wall Street public tape. One thing to be clear is that this NYSE, these stocks in here, MMTs, Mosaic and Potash, are good for intraday debits long and short. AGU is coming into play as well. So the gap up list, it's not like we have a long list like we did on the NASDAQ, but let's take a look at the gap open down. Here we have SHI down 2.70 ratio, S&P down $1.84 ratio, BTU. Wow, look at that one. So BTU Energy is pulling back $1.21. There could be some news associated with it. Diamond Offshore, once again, down $1.06. So we're seeing some of the sectors that had advanced or made, higher highs starting to pull back. The NVO down 90 pennies. So this is the gap down list. The gap down list is much greater in value, as you can see here, versus the gap open list. Let's go back to the gap open list. You see, you only have 4 items above a 1.00 gap dollar cost gap ratio versus, look at the size of this list. So you got 1, 2, 3, 4, so you got 5 here. Okay, but right below that 1.00 gap down ratio, gap up ratio, you start seeing the list go from 94 pennies, 88 pennies. You start seeing where you got, a longer penny gap down in the NYSE than up. Because once again, here's the up list. So trade management's going to is to watch all the key elements to where these markets are going to try to consolidate the upper ranges. We did the exact videos for you on Sunday morning. That was on 3/27/2011. You have the S&P 500, you have the NASDAQ comp, and you have the Dow Jones. Daily and weekly. We talked about it very clearly. So that's the gap up list, and I'll conclude the pre-market futures. It's all going to be dependent is how we set that lower end of the tape up relative to last week's performance. We had a very good 5-day bull rally last week. We're going to see what it's made of starting this week with new money. Does it come in? Does it not? Hey, are they buying or selling? And the fear factor. It's very, very, very important, MMTs, to see what that public engagement is. Very important. Because in the end, during that transaction, as a market maker, either the public is buying or they're selling. If they're selling, slide the bid short, half bar. 369, 1215 down, and then bounces would be, they would bounce at 369, but let us not forget about that golden rule. And what is that? Price action momentum on the reversal on the upside. If that's diminishing, then that means that the move is weak off of the bottom, and we're going to probably hit the half previous bar and slide. But how would you know? The big red bar next to it, MMTs. That's how. So we're going to be looking for a lot of things. That's something we're going to be looking for. So once again, today's date, end of the week. This is my quarterly, weekly expiration for the trade management price action. We will be doing a very sophisticated mathematical formula on all of the indexes for the first quarter of 2011. That's January, February, March. We will have that, and then there'll be 3 more that will follow, and we'll see how good our yearly formulas are, and where the indexes had hit their bottoms and bounced to the current date of 3/28/2011, and we'll make very, very, very sure as to what that momentum is, just as the momentum was on the bear reversal down to the bottom, is what that bull momentum is on the way up. That bull momentum is going to be the key in that price action. We will decipher that today using our SMF market maker platform. It does the work for us. We make a market at any price level. That's what we're here to do. That's what we will do. Have a good day, MMTs.